You're batting cleanup today, so you got to come up with something that nobody else has said all day today, which is a little bit more difficult, but I'm sure you're up to it. We've seen a little bit of air come into these markets here and going into tomorrow. Is that because of this report, because of the end of month, end of quarter? What do you think it is?
Well, markets as a whole, not just the agricultural space, but the outside markets, looking at crude oil, S&P, bonds, et cetera, everything just seems really, really fidgety. And I think a lot of that indicates a lot of this is in a month, in a quarter positioning and squaring. And we're seeing that spill into the agricultural markets. Now, today, we're seeing a little bit of a mixed bag. We've got corn moderately higher, soybeans moderately lower, and wheat kind of treading near unchanged. Now, ultimately, the corn market's been range bound for the better part of the last month, month and a half, but I'm starting to think that we might be able to carve out a low. Seasonally, we're trying to carve out a low in the first week of October. There's been a lot of bearish news thrown at this market, and it really hasn't been able to break much lower. And funds are holding their largest net short position since August of 2020. So if we can kind of chew through the rest of this week, maybe turn the calendar over, potentially that's the catalyst that gets us a little bit of short covering here to start the new month.
Yeah, I mean, you're right. There has been some negative news thrown at some of these markets, and also it's that negative time of year. We've got harvest going on. We've kind of held in there a little bit, but we see beans struggle. Even with the tightness in beans, they struggle to hang on to that 13 line, and you would have expected by now maybe something to shoot corn up over $5, and you've still got a 5 in front of the wheat market. I mean, what would it take? I mean, is it one of those things that time is going to really be the reason that we start to kind of rally from here, or it's not going to come from Ukraine-Russia war? That we've seen a lot of headlines there. That doesn't work out, does it? I mean, I think that, unfortunately, what I'm worried about is that these prices are trying to tell me something, and I'm not listening just yet because I don't want to hear this is going to be where we're going to finish the year, because it just feels like the market's trying to tell me that we have the bushels.
Yeah, well, time is ultimately the deciding factor every time, right? But soybeans, you're right. I'm a little bit more cautious on that end. We have been for a while. We did test and hold 1280 to 1285, which was really significant support. It was the August lows as well as the 50% retracement, or basically a fancy way of saying the middle of the trading range from those May lows to the July highs. We tested and held that on the first test. I'm a little bit nervous if we go retest that, we break below, spark a little bit more long liquidation, and really there isn't a whole lot of support till you get down to 1247, 1250. So beans, I'm a little bit more cautious of. Maybe we can retest 1320, 1330. That was the last week's breakdown point, as well as the 200-day moving average. But I think the market probably struggled to get out above there. So I'm halfway optimistic on corn, a little bit cautious on soybeans, and wheat, well, that's just the wheat market. That'll leave you
right.
scratching your head.
Real quick, we had export sales this morning. I mean, how much is this stronger dollar hurting our exports?
Well, weekly export sales, they were largely in line with expectations, better than last week, which was, I guess, a little bit of a silver lining. The dollar, you're right, has been just on an absolute tear, pulling back a little bit today. Hopefully we can get some reversion to the mean and the U.S. dollar, and that could potentially be a catalyst to put a little bit of a tailwind in some of these agricultural markets going forward.
All right. Well, I mean, that's good enough for right now. I think we're going to have to go away. We're going to pay some bills. We're going to come back and talk more with Oliver Slope. He's with Blue End Futures up in Chicago. We're going to come back just after this. So the pressure's off, Oliver. You don't have to talk as long as you did the last segment. But what are your thoughts here when it comes to the livestock?
Oh, man, I don't even know where to start. I think a lot of this ties back into what we talked about in the grain segment, which is end of month, end of quarter, certainly having an impact on money flow in a lot of these markets, not just the outside markets and the grains, but also the livestock as well. We've seen the volatility really ramp up. We saw markets really kind of fall off a cliff earlier in the week, starting to rebound a little bit today, and that indicates some end of the month, end of the quarter trading. Now, the thing that's really lived in the back of my head for several months now is the fact that funds have been extremely long this cattle complex, and we've seen what they can do when they start to liquidate those positions. We saw it earlier in the week, and they still have a large net long position. So I'm a little bit cautious, especially if we do start to see interest rates continue to rise and that pressure the outside markets. I would have to believe that would make funds a little bit nervous about being overly long the cattle market here at these levels.
Especially when, I don't know, I mean, I'm going to take a little bit of a right turn here that's not really fair, but I feel as though the administration, at least and the market participants, have had a lot of balls in the air, and I feel like we're starting to drop a few. I mean, and what I mean by that is all of a sudden we have oil trade up to $95 overnight. You see the 10-year yield spike up to, say, 4.7, just underneath 470. That maybe is on its way to 5. We've got reports of maybe $150 oil. I don't know. There's always those types of things that come out when you do see some of these big spikes. But it looks as though it's going to be kind of an interesting ride here for the next probably 3 to 6 months, maybe even going into the election. But I appreciate you coming on very much. Thank you very much. Oliver Slope, Blue Line Futures in Chicago. Great job. I'll bring it back here to Nashville, and I'll pass it back over to Suzanne one more time.
Well, it's not going to stay with me long because